Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock, with news that many tariff actions kicked in on July the 1st, and inflation seems to be moving higher in some key large economies. Firstly, the US Fed's preferred measure of inflation hit 2% in May, up sharply from 1.8% in April, and above the 1.9% markets were expecting. The PCE non-core inflation rates were 2.3%, and this data came as personal consumption slipped noticeably. Like its Conference Board rival, the University of Michigan Consumer Sentiment Survey is also showing a slide on the expectations front, although the main levels are holding. That same survey showed an overwhelming level of support for trade and less tariffs. In the trade wars, Canada struck back at the Trump administration over American steel and aluminium tariffs overnight, imposing punitive measures on $16.5 billion worth of American goods until Washington relents. Canada's GDP growth rose at the rate of 2.5% in April, slower than for March, but in line with analysts' estimates. China's official June factory PMI slipped a little as the trade war dampens the outlook, but it is a level very close to what it was a year ago. Their services PMI rose marginally. China also had another round of tariff cuts rolled out on July 1, a stark contrast to the US approach. But on the financial front, China is cracking down hard on new tech non-bank deposit takers in a bid to eliminate a huge financial stability risk. EU inflation has come in at 2%, although the core rate there, without fuel, alcohol or food, was at 1% in May. Sales of new Australian houses fell more than 4% in May and are now more than 12% lower than the most recent cyclical high that occurred in December 2017, and that's a substantial retreat. The US Treasury 10-year yield was marginally firmer at the market close at 2.85% and up another 1 basis point in later trade. That American inflation data had virtually no impact on benchmark bond rates. The Chinese 10-year is at 3.49%, that's down 5 basis points from Friday, while the New Zealand equivalent is now at 2.88%, down 1 basis point. Gold was marginally firmer in New York, but is still only at just $1,252 an ounce, which is a chunky $17 drop for the week. US oil prices remain high and are just over $74 a barrel. The Brent benchmark is now just under $79.50 a barrel. These both represent a $5 rise in the past week. And locally, don't forget we had our own big tariff increase as Auckland Motors were hit with an 11.5 cent a litre new fuel excise tax starting in July. Expect considerable cost flow through to everything transported and the impact to be national. That will have the same effect as crude oil prices rising from $79.50 a barrel to $90 a barrel. The Kiwi dollar starts the week unchanged at 67.7 US cents. On the cross rates, we're at 91.4 Aussie cents and 58 euro cents. That puts the TWI at 71.1. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.